Good morning, everybody. Welcome to the Flow Show. Off we go again for another week of trading. Morning to the two lads. How you doing?
Good morning. Hello, hello.
Good weekends all round?
Yeah, I saw Steve actually. His son
did you?
had the birthday party.
You saw Steve. Wow, that's a. Did you get a photo?
He had the professional photographer, so I'm sure we're gonna have loads of photos. Yeah, how are you? How's your weekend?
Yeah, mine was all good. A little bit of running around, a bit of DIY, which I'm never good at, but still got to have a crack, haven't you?
Yeah.
And, bit time with the family, in-laws, that sort of thing. So yeah, good weekend all round. How about you, Kay?
Yeah, all good, mate. Quiet. Nothing really special. Watching sports most of the weekend.
Yeah. How's the wagon going?
The wagon?
Staying on the wagon for
Oh yeah. It's going strong.
No little wobbles over the weekend?
No, not really.
Good stuff. Are you feeling the benefit from it? That's the most important thing.
Nope.
Yeah, actually, I do. Lost a bit of weight, but the missus is struggling a bit with the weight loss, so we don't know why. But no, all good, man. Another week, and then I'm going to crack open a bottle again.
Yeah, I'll do all the hard work in 2 days.
Exactly.
Well, no way it continue anyway. Right, so busy old week this week, hopefully. So we'll get stuck into it. We'll have a look at what's coming up this week as well. China's economy is not facing a systemic, sustainable deflationary pressures, says the Shanghai Securities Journal. So a few comments there about what we heard last week, that they're maybe starting to lean towards looking for inflation to become a problem. And this is sort of saying the same, that they're not seeing or going to be seeing any deflationary pressures. So if they're not seeing deflationary pressures, they're going to be seeing inflationary pressures. One can conclude from that. So it's just a little bit of language that we're getting on inflation from China that we'll need to keep an eye on to see if it does end up going that way and seeing some inflation. Over in Japan, Kishida's ruling LDP party had these by-elections and they won 4 out of 5 seats. That's prompted Kishida to say he's not now thinking about the possibility of a snap election. There was some small risk that these elections went badly for him, but it's all tickety-boo. I think the seat that he did lose was a loser anyway, so no real change there. But we've had comments out from Ueda coming ahead of Friday's BOJ meeting. And maybe not long into the job, it's only his first couple of weeks. And he says he's feeling the weight of responsibility as BOJ governor. So not something you'd want to hear from the new man. Not a sign of confidence, really, is it? But you know, it's all well and good when you're making comments outside the hot seat. It's a different story when you're in it. He did say that commercial real estate prices are rising, especially in Tokyo. It doesn't see Japan's property prices as excessively overvalued. It's hard to say how much wage growth will be needed for the BOJ to reach its price goal. But until then, they're going to continue with easing along with the price outlook. They will normalise or look to normalise policy if underlying prices hit 2%. Still expecting CPI, excluding energy, to slow down soon. Also says that it's true that rising import prices are being passed on to domestic prices more than expected, and will watch the price trends for setting monetary policy. Can't say how now specifically the BOJ would tweak YCC. And when asked about potential exit from their easy policy, he said that the Bank of Japan's inflation forecast half year, 1 year and 1.5 years ahead must be quite strong and close to 2%. And we have had some last week, I think it wasn't the week before, some noises, some sources saying what they might be setting their inflation targets at or forecasts at for the next fiscal years. Both elements coming in that we saw, I think we saw 2024 and 2025, both were set below 2%. One was close to, but not quite there. So we get these forecasts coming in at this meeting as well. They'll be closely watched. Also says that what they will have to do with the ETF holdings will become a big issue when they head towards an exit from ultra easy policy and YCC. So yes, we have the BOJ coming up on Friday, and these comments are pretty much what he's been saying recently. So very little expectation for this meeting in terms of policy moves, zero expectation in terms of any policy moves, but it's all going to be in the language. If there's any subtle changes, all it takes is a couple of words here and there, and the market will go off and running, thinking that they may turn a bit hawkish. Kay, what do you make of those comments overnight?
Wow, nothing really. There's a lot of speculation going around. As we've been saying so often, the base case is for no move now, but then see gradually over time how they are going to formulate what they plan to be. Yeah, I'm not making much of the weekend comments, to be honest. Still think it's going to be, well, he hints at least at a slow process, right? But then saying that they might review the whole framework from the 1990s has probably the market on its toes. But I guess getting deeper into the week, we are going to see some some speculation at least, perhaps propping up the yen a little bit. For the time being, we're on a different trading scheme, but the market is now really waiting to see exactly what they are going to do or to say, right? So yeah, I'm not making an awful lot out of those comments. It's a lot of it has to go there before we do this, but then we could do this, and then perhaps not. You know, it's tough to make a definite judgment right now.
Yeah, I agree with that. But as we said, you know, there's going to be no policy change, and if it'll be a shock. But it's really in the forecasts and the statement. If there's any sort of language changes, any hints or confirmation that they're staying as is, and the market probably move one way or another. But we can scroll around to that later in the week. But one thing I do want to highlight early is that we also get, it's not on here, this calendar, but we will be getting Tokyo CPI for April on Friday. Last week we got the March numbers, headline CPI, national CPI numbers, but we will be getting a Tokyo CPI for April. So that's going to be fresh data. A couple of hours before the Bank of Japan meeting, so that could create a few wobbles in yen pairs if there's a big variation to what's expected and what we got previously. If it comes in hot, could get yen getting bought significantly into the BOJ, and if nothing's changed there, we could see a quick reversal. So lots happening on that Friday. Might even stay up for it myself, or at least get up for the CPI and have a look at that. Do you reckon that's going to do anything, Kay?
Tokyo is about, if the numbers haven't changed right now, is about 25% of the Japanese economy. So it has definitely a say in driving the CPI globally in Japan. So. But then it may come into play perhaps rather after the Bank of Japan, you know. I'm not sure if it's going to, unless we see a big variation, of course, but shouldn't have too much of an impact until after what we know about UEDA. I'm starting to think that if the market is really expecting at least some kind of hint at some kind of hint that they are discussing some stuff that's going to be a bigger mover than the Tokyo CPI. But if they remain completely mum, then yen could actually get a serious hit on the head, right?
Yeah, yeah. Just reading a story here that's just popping up on the Newswires that China is going to guide banks to further cut deposit rates. That's according to a Reuters source. They want to, the financial regulator wants them to cut the size of structural deposit business and lower rates of innovative products, according to a banking source. So a little bit of easing still going on there in China. That's hot off the press, as we like to say. Right, let's carry on with that. Going over to the ECB, and we'll take a look at the rest of the calendar in a moment. ECB's McClough says it's too early to plan a pause in policy tightening. Rate needs to continue at restrictive levels. ECB's Wren says in monetary policy, we have moved into an area that restricts aggregate demand, and there is no reason for us to abandon it or exit prematurely. So no slowing down from him. ECB's Wunsch was out again. He's been out a few times recently. It says to keep raising interest rates unless wage growth slows. I would not be surprised if we had to go to 4% at some point. Now, interestingly, he makes that comment about unless wage growth slows, because German public sector workers have agreed to a pay deal. Each worker will receive a total of 3,000 euros in tax-free payments in instalments through to Feb 2024. From March 2024, wages will be boosted by 200 euros per month and then rise to 5.5%. This agreement will run for 24 months, starting retrospectively from January 2023. So one of the pay disputes ongoing in Germany looks to be resolved, and some big numbers being thrown out there, 5.5% wage rises, on top of 200 euros per month, on top of 3,000 euros in tax-free payments. So no let up for wage growth, particularly in Germany and that public sector there. ECB Stornois says rates have reached close to maximum. And while we have been in Germany, we got the IFO this morning, and not really much to write home about. A little bit better on some of the numbers, down on others. Bit of a mixed data, nothing really to write home about on that lot there. Going back to Friday, and we got the manufacturing data, the ISM data from the US. Get it up. The PMI there, the S&P Global PMI coming in better on all aspects. Manufacturing moved back into expansion at 50.4. Services higher, 53.7, beating expectations, was expected to dip on the month previously. So decent numbers coming in there on both counts for the US. We had seen the manufacturing a little bit flip-flop from the regional numbers. Remember, we got a good Empire last week and then a really stinky Philly. But this one's showing expansion and good news on that front. Got a while to go before we get the ISMs. I don't think they're this week, but we'll have a little quick look at the data coming up this week. Not a lot going on today, just some more regional surveys for that. Tuesday, probably the biggest number is going to be the US consumer confidence tomorrow, and those inflation expectations that we look at. The Michigan flash number, if you remember, the 1 year expectation jumped a whole 100 pips from 3.6 to 4.6%. So those are going to be watched closely in the main consumer confidence numbers. Then we get some housing as well. On Wednesday, not a lot going on. Durable goods, probably the pick of that bunch. Keep an eye on Aussie CPI as well. But Thursday, we get the first of the Q1 GDP readings coming out of the US. There are a couple of small other points coming out. South Korea, I think, coming out with some numbers. I think one of the Scandis, but US is the first major to come out with Q1 data. So we get a look at how economies have fared in the quarter. Are we going to be seeing recessionary type numbers, or is everything going to be tickety boo? Further housing data coming up later there, and then into Friday, as we said, some decent numbers on top of the CPI stuff from Japan, the meeting, and then France come out with their start of their GDP stuff, as do most of the other European countries throughout that. And then on Friday is PCE from the US, so big inflationary data there. Lots to get stuck into then on the data front this weekend. Let's just finish up some of the headlines. I'll keep a look at the Bank of America flow data now and again. And a few weeks ago, I think before we went away, we were talking about how there's been an increase in money flowing into pure cash. Those funds saw outflows of 65.3 billion at the last look last week. That's the first time in 8 weeks there's been outflows from cash. Bond funds recorded inflows of 4.6 billion, but investors were selling stocks. Global stocks, they sold a total of 2.6 billion, and they got out of gold funds to the tune of 70 million. So a bit of a switcheroo coming in there. It is end of month this week. Value date, K, is Wednesday, I believe.
Yeah.
Yep, it's Wednesday. So we'll be looking at what's going to be expected for the end of the month. I haven't seen any early stuff on the models. Kay, you got using the your own model?
Yeah, my half brain cell model shouldn't be too much. So far this month, there's not been an enormous divergence on the equity. So far, not expecting too much of a dollar interest, but the bonds have been on the move. So perhaps there's a bit of rebalancing to be done there. But it's going to be a very big week as well for the earnings in the US. So I do think this week is going to be one that will give us some decent moves. And starting on Wednesday, well, already tomorrow there's a few numbers that can make things move, but then likely going to be the earnings season, and then yeah, the rest of the data, the heaviest coming out second part of the week or from Wednesday, and I expect from Wednesday it's going to be a busy week from them.
Yeah, definitely. Angela mentioned it's Alphabet and Microsoft earnings this week as well. Yeah, they're going to be importantly watched. I'm sure that will be covered in greater detail on the F.A.C.E webinars this week. Don't forget to tune in to those with the coach and the main man, Dale. He's going to be heading those up as usual. Right, just a bit of geopolitics before we get it stuck into the pricings. The Nikkei reported the US wants to strike economic deals with Pacific Islands to counter China. And China's ambassador to France had some interesting comments out of the weekend, saying that ex-Soviet states lack the basis for sovereignty. So a little bit of a dig there at what's going on in Ukraine. Also, probably a bit of a veiled message over their intentions for Taiwan. We're still in this mode where we're getting these little niggly comments still coming out. For example, the US has apparently urged South Korea not to feel any China shortfalls if Beijing bans Micron chips. And on the oil front, the Kremlin says that Putin and the Saudi Crown Prince expressed satisfaction with the level of OPEC plus coordination. So everything's going okay there in regards to oil and how much they're all pumping. Stel, you make anything of these geopolitical headlines? I know we've spoken about it before, and the market is ignoring them, but it's still coming out regularly, still niggly lines, insinuations and veiled threats and whatnot.
I'm so numb to these things. You know what else I'm really numb to? Numpty? No, I'm not a numpty. The debt ceiling, man. Debt
That's
ceiling
why
is
I'm not
coming up.
reporting it.
Kevin McCarthy said that the House will pass the debt ceiling increase. It sounded very confident. And let's face it, I don't think the debt ceiling will ever be a proper issue. Maybe, we get another government shutdown for a little bit while they're doing their poker playing, and they're, oh, I give you this, you give me that, and then everything goes back to normal. But yeah, I have to admit, these kind of headlines, debt ceiling and China and oil and China, Russia and India and oh man, seriously, it's dangerous, but we are all numb to it. I mean, at least I am, and I don't see them move the markets in any way. And this is what we are trading. We're trading markets. Obviously, if there is some kind of proper escalation, that's going to be a different issue. But at the moment, I don't see how these can make any difference.
Yeah, no, I agree. I when I look at this stuff, I mainly look at things like the frequency and the rhetoric. Are we getting 2 headlines a week, or are we getting 20 headlines a week? Because it just, as I say, just might get the market on its toes if it gets too many of these headlines at some point. Yeah, but you're right. In the main, it's all read, move on, file it in the back of your head, sort of thing. Or ignore it.
I mean, you're right. It feels like something is kind of brewing a little bit in the background. Definitely more than it was a little while ago. But in terms of trading today's markets or tomorrow's markets, I don't think anything makes any difference there.
It feels like a game of Connect 4. Everyone keeps dropping their counters in, and at some point, someone's going to line them up, and we're going to get something. But there's so many pieces that keep getting moved around. It's just a continued flood, and I think it's when the market is numb to it, then it becomes more dangerous, because it's not anticipating anything and it's not ready to react if it does get a headline, which means craziness ensues, no doubt.
Nice analogy, by the way. Gives away your age, but nice analogy. I like it.
which bit? The
Connect 4.
Connect 4, yeah. Fantastic game. Love beating the kids at that one.
Yeah.
Right, so let's have a look at what's going on in prices. Euro dollar, for some reason, making a little move into 110. You guys got any insight for that move there? I've not seen anything myself. Headlines, will be just
crosses, mate.
Crosses.
Yeah, look at the euro crosses.
Oh yeah, look at that. Yeah,
it's just ongoing in that. And for those who were probably trying to play against the 110 euro dollar, bit of short-term stops, it's really just euro crosses being beat for a month and a half, really, and it's just not changing. And perhaps even we can see this blow off top, or how do you want to call it, acceleration into the ECB, and then the card house can fall apart a little bit. But for the time being, it's too tough to stand in the way of those euro crosses. Just look around. It's really incredibly beat, the euro.
Yeah, definitely. Everywhere you look, it's bid, and we get little breaks of highs and things.
It's non-stop.
This is one currency, the euro, where the trend is remaining your friend, and you can keep in. And a lot of people always look at moves like this and think they want to fight it. It's done a big, huge move, and everyone wants to go, oh, I want to sell it. I want to sell the top. I want to pick the top. Until you get such a time, something like this, where you see the market pausing and halting, and it's not breaking up, that's where you try to pick those tops. You don't try and pick a top up here unless you've got some, strong tech in the way. Kay probably has. I don't, but we spoke about this last week when people were asking about CAD Swissy. What's going to stop it from continuing to low, to keep breaking or keep going down? At the moment, nothing's stopping it whatsoever. So you don't want to be trying to catch that knife. We looked at this level here around 65.5. If it gets below there and holds below there, we're heading lower. And then we had these two lows here, we broke, and now it's resisting. So, you know, these moves keep going. You can't fight the price action. You can't fight the market, what it's telling you, until such time as you get the price action building bottoms and tops that you can then rely on and give yourself something to lean on. But as far as those euro crosses go, yeah, it's onwards and upwards. There's still some levels to go. You know, I'm going to expect this this former high up here, this top of this fib, and I haven't adjusted it yet because I'm just keeping an eye on it as a horizontal line. But around 110.30s, I'm expecting to see a bit of action up there. Maybe that's where this move peters out a bit or finds a bit of struggle. If we're back above there, then maybe we're going to have a look at another highs and maybe up to 111. We'll see what we get. You know, euro sterling, another one. This 86, 88.60 area, you know, has been a sticky point for ages, and you know, we've had 3 goes at trying to crack it and we can't, but we're coming back quicker and quicker to it. So maybe we're going to get a little break here, and then we'll have a run up to 89. Then we get to see what happens up there. 89.20s, 25s is going to be the big number up there. That's where we've had a really decent double top. So that's going to be strong for that pair. So yeah, you know, these, if you want to pick your tops, look for your significant areas. Don't just piss around in here against nothing, because that's when you get caught out and it shoots up another 50, 60 pips. I know Kay's going to mention this. 124.50 again.
Yeah, you're stealing my level.
I'm stealing your level. That's all I'm saying. I'm not going to say anything else. I mean, I'm going to move off the chart really quickly. There we go. Look, on.
No, mate, no. Just show it. It's really a magnet. It's a really big magnet. This one, because it hangs around even when the rest is moving. So as a result, or cable is here as a result of euro sterling, or one or the other. But and euro sterling is undeniably bit like all the rest of the euro crosses, but a bit less so, right? I mean, I think sterling is also somewhere not getting sold too much, because it's there's no real fundamental or data reason for it to get hammered right now. So it's more the euro sterling moving and cable hanging around here, but it's a definite magnet, this level.
Yeah, I think so. And I think probably that euro sterling move is what's keeping this where it is at the moment, compared to, because even dollar yen's rallying. You know, it's not often you see, you know, all these pairs moving the same way together. But that just shows you what's going on in the crosses yet again. That the crosses are maybe doing a lot of the heavy lifting here, and helping the yen side of dollar yen rather than the dollar side of the pair. But yields looking a bit iffy again this morning, a little bit weak. Two's still holding below that 4.26% area that we flagged last week. Tens as well, not looking too good also. So these are going to be the drivers coming into the US session today, and keep an eye on those. I am looking at dollar China today. We keep nudging up against this 91 level now, and I'm beginning to think we might be on for a break. So I've got a little buy stop in just above 692, just to catch a break of that level. See if maybe we're going to move up to maybe this area, 94s, 95s, 96s even. So I'll keep it on a tight leash, but it's just the price action is suggesting that we may get a little break above this area because we keep knocking on it so many times. Kay, Stel, you got anything you want to show in particular? Who wants to take
I can take over tomorrow. How about Kay? Because I don't really have that much at the moment. But whatever you guys want. If Kay doesn't have anything, I can take over.
Well,
I'm sure Kay got something.
I can always show something, Stel, you know that.
Okay.
Okay, let's do this. Hold on one sec. Well, let's keep an eye. Let's have a look then at those euro crosses, right? Let's start with the euro yen. Yeah, so as we've already been mentioning, the it's Bank of Japan week. We don't really know what they are going to do exactly, but what we do know is that euro is really, really very strong. So at the end of last week, we had a bit of a test under that prior high in the euro yen. In the meantime, we're already back above. If you look at the dollar yen, yeah, the dollar yen is beat because it hangs in the 134s. It doesn't hang in the 132s. Let's have a quick look at that one. It's respecting this kind of a wedge. It's kind of respecting still the break that we saw from earlier. But that's because of those yields not really giving up, and the Japanese yields just hanging there, you know, just hanging there. But we're trading in the 134s. So we are not trading. We could have been trading around here in those 123s, a bit more in the middle of what we did lately. But it's hanging in the 134s, and I do think it's really a pure factor of what's going on in all the euro crosses, and so the euro yen is no exception, right? The market is even though there may be something coming out of the Bank of Japan. In the meantime, well, you can't ignore what's going on in the euro crosses. So euro yen is possibly going to be going into the Bank of Japan. Why not around those prior highs again in the 148s? And if that wouldn't be enough, if the Bank of Japan doesn't do anything, then I could see us trade close to 150 perhaps. But that's all music for later in the week. It's just to illustrate what those euro pairs are doing really today. And if you look at Euro Kiwi trading at the high, this thing is really we're nearly back to 2020 levels. So the next big level coming up here is really 180. Since we've broken above this 176, it hasn't really looked back. We had this one little test somewhere lower, but it's really been powering on this one as well. Euro Aussie, no exception. Although we are not yet here at the top end of the wedge, but it's pretty steep and a big target around those 165s, and it's going up and up. So it's very hard to fight. I tried to really on Friday. I actually gave it a little try towards the close to say like, okay, it's around 164 here. Why not give it a quick try? But then waking up, it's already above again. So I gave up. It was really very small. And it's all really against those levels that I was trying to see if we could find the top. But the euro is just too strong, and it just continues to move on. So for the time being, it's likely not yet, at least not in the immediate, yet the moment to fight it. Same in the euro Canada. We are now gradually coming back to those 2020 23rd of March highs, and again, since we moved above this 147.60, 148, it doesn't look back. It was very easy to break those prior highs, and we are going higher now. For those looking for possible reversals coming up, and again, as I said, it may not be before the ECB actually, but if you would look for reversals, then you look at this level, right? 148, 147.60. Those 40 points here, that's where it's going to be decided on the Euro Canada, for instance. If you look at reversals, of course, in the meantime, you can always try to pick a top and say like, oh, it's below the daily low, let's give it a go. But then I still respect this zone here, right? If we get back into this zone, and if you're a short-term trader, it's probably worth taking some off. If not, like me personally, I'm not going to to try and find a top in the middle of the process of going higher. So as you can see here, I've got this line that's even that's above 150, right? So there's another percent perhaps in the making before this reverses. For that, also keep an eye on oils, of course, because we are, where is it? Oh, there. Keep an eye on oils because we are trying to fill the OPEC gap still. So 75.70, 75.50, 75.50, 70 is where really we are looking oil to hold. If we get down there, probably that EuroCAD is going to trade at levels closer to 150 possibly, and then we'll have to look what's going on. If then oil stabilizes or starts to reverse higher, then probably your EuroCAD has or the dollar CAD, for that matter, has a possible top in place and start to reverse. Quick look at the dollar CAD. We are approaching the 50% of the latest decline, and the 50% of the wider one that we had at the end of last year comes in at around 136 the figure. So 135.80, 136 the figure to keep an eye on dollar CAD if I were you, and on the bottom side, well, 135.10, 135 figure, but it's going to be more important to see what's happening in the low 134s if ever we see a setback in the very near future. Daily cloud on the dollar CAD. Thanks, Michael. Let's have a look. Where is it? Oh yeah, it's 135.60. Thanks for that. Yeah, that's a good one as well. So this is going to be your zone. See, this is a good community. We always get ideas from other people as well. We can't look at everything ourselves, right? So at the start of the week, as I said, it's Bank of Japan. So I think we look at this one first, then keep an eye on what's happening in the low 133s towards 133, the figure. That's going to be a decent marker, in my opinion, before we speak again about those lower 130s. If every radar comes out with something significant, that level, those levels are for sure going to put on the pressure, but we'll look at perhaps the yen a little bit later. I'm looking at the clock as well. What else? Aussie and Kiwi, not moving a lot, the Aussie dollar, but we are below 67.05.15, and for the time being, we keep below. Your support zone 66.65-ish until 66.55. So we're a bit in the middle of the park. That's your tightest range. If any dollar moves or any dollar news would come out, if you get a break above, there's probably 30-40 points on either side there. Yeah, that's exactly 30-40 points on either side. Kiwi broken below, tried this 62 again on Thursday. Then we had like this little stop run, which we already indicated, but we're below. We're in the middle of that 61 zone. Still oriented onto the downside. I think if we don't get any worse US data, I reckon we may be on our way for a little retest of what's happening on those at those prior lows for early March. But if we get above 62 again, then that trend line will be around there as well. 62.30. Sorry, if we need to really break below above 62.30. Sorry, to see this starting to move up again. So that's the top side area. Cable, yeah, we've already spoken about it. This is a real magnet around this level. Needs to get above. We tried quickly in sympathy with the euro dollar moving up above 110. Tried quickly to get above, but then we also have those other levels here capping. The real level that should break is 124.75, 124.80 in the short term, and then have a look at what's happening at 125. The other side, 124.10, 124 the figure. If that goes, then we can have a look again at 123.75. And Ryan already showed what we need to know in the euro sterling. Yeah, I had a very short-term channel here on the euro dollar. So we broke above. I think it's more to do really with the euro than no, definitely more to do with the euro than the dollar. That's for sure. With what's happening in the euro. But we are gradually filtering through this move, and it's losing a bit of steam, and we're nearly back on it. It's trading back 110 the figure now. Back below, we'll probably, perhaps some really short-termers will have to try to break this, buy the break and then getting stopped out below. But I'm really not very much getting involved in the euro dollar right here and now. I might get much more involved once the ECB and the FOMC are out of the way. This Norwegian kroner, I just did a really tiny little bit, perhaps a bit of FOMO at the end of last week. I started to leg into very tiny euro NOK, but basically we're still. This still looks like a test of those 1170s is clearly on the way. This prior high, then that 61.8. Those are the levels where we really have to keep an eye on. For the party to be over, we first of all need to break back below 1153, and then more importantly below 1140 on the euro NOK.
I'm going to follow you on that, Kay. Sorry to interrupt. I am looking at both Euro Norway and Dollar Norway. I can't seem to decide which one. So I'm actually going to do half size, but each one of them, because I don't care. I don't want to care where Euro Dollar goes. But yeah, I'm almost there, mate. I'm almost there.
Yeah, that's the thing. You know, it's if you look at the Dollar Norway, I find it much less. It's broken through the trend line. It went up and then it holding this one, the 50%, the 1056. But I'm much less convinced myself on the Dollar Norway. I think the Dollar Norway could be one for the end of month, and then perhaps do a little one ahead on perhaps the Norges Bank reducing FX sales possibly. And then keep some ammunition for the Fed or so, if they go into pause mode, and then at the same time look at what's happening in Brent around around that $80. There's a little bit to take into account, and I might just wait for the Dollar Norway until I get some more clarity on the dollars. The problem is I'm no real dollar bear right now, and I'd love to be more bearish dollar myself before really jumping into Dollar Norway, because it will have potentially more to go if the Fed signals that they are done and starting to talk a bit more about risks, about credit tightening, about liquidity tightening, and doing the work for monetary policy. But that's going to be, I think, another week before I see a bit more clear myself on my own dollar view.
Yeah, makes sense, mate. Makes sense.
Yeah, but thanks for that. Thanks again, still. Yeah, I was looking at those oils. Yeah, Brent is less clear, but
refreshing.
Brent has already, or we're very close to
refreshed.
To fill the gap here, the oil gap, and it's just around 80 bucks on Brent. Okay, 80 bucks. We are not far. We're $1 away. So keep an eye on what's happening at 80 in Brent for a bit of guidance on the Norwegian kroner. Gold. Finger. It's happening in the low 1970s, right? That's where if gold breaks the low 1970s, then there's a chance of getting back into the 1930s. Until then, I think it's sideways for now, for as long as we remain below 2015. Silver could be a little similar, but we are holding still levels, 2460s. We are not even going to retest them. As the people in the room know, I let some of mine go. It's trading around 25 a figure. No interest to trade around here at all. I'll see if I reload this thing ahead of the FOMC or wait FOMC. Ideally, they would really do us a favor in if FOMC could hike, get a quick spike lower in silver here and there in this 23 3/4 24 zone. I'm really going to be ready to push the button again on this one. Some may say we are building a little bit of a head and shoulder here, perhaps. I don't know. It's possible. And then yeah, Euro-Aussie Derigi. Do I pronounce your name correctly? I've already mentioned the Euro-Aussie, and I've already said it's tough to fight because we are now well and truly through this 164 the figure, and it's continued to power on. This could have a look at 165.40. Why not even, why not even go to higher FIPS, in the 166s? It has to go below 163.90 figure to start to reverse. It really has to go below and hold below to start the reverse. This is a bit too steep for me, this one to look at, but it really has to go below 163.90 figure to get back down. And then we can possibly talk about bigger retracements into the 162s. But for the time being, it's so hard to fight this one, so hard. That is it. And I think that's enough for the start of the week, unless somebody has something to talk about in particular, or Ryan.
Yeah, mate.
Still, you want me to look at something, or?
I think that's a good start to the week.
Yeah, I think so.
Yeah.
It's always getting prepped for the week ahead. That's
Yeah.
the activity I certainly do start the week, and I hate
think
Mondays first and foremost.
Yeah, the theme is there, and the theme is clear. And just looking at dollar yen is now spiking, and this is typical for what's happening. And just grabbing this euro yen back for a second, just as an example. This is typical for what's happening. I should show my trading screen, but I'm not, because it's too personal, right? But this is typical if you look at what's happening right now in the euro dollar and the dollar yen, and even in the rest of the dollars. Look at what's happening right now this morning. This is typical for cross trading. You have the euro, this morning, the other dollars didn't move much, and then you have the euro dollar moving up. And I'm going to go for once on shorter time frames. So the euro dollar was moving up this morning from the opening. Really, it was big, this euro dollar. And then look at what's happening in the dollar yen at the same time. So you have this first move in the euro dollar, and dollar yen trades within 10 points. And now the euro dollar found a bit of resistance in that 110 20s, whatever. And what happens then is dollar yen starts to move higher. This is typical how euro crosses are bought in the market. If you look at model funds, if you look at, well, the model funds, they can just press the button on euro crosses as well. But a lot of asset managers do go via the legs. They sell $1 and buy that dollar back against the other currency, and they construct their crosses this way as well. And if you look around the spectrum, you're going to find exactly the same thing back on the Aussie, exactly the same thing back on the Kiwi right now, and even on the sterling. Sterling went up, cable went up in the first leg of the euro dollar higher. We've had cable moving up here. And what's happening once the euro dollar stalls? Cable is coming back down. Why? Because of this one, because of the euro sterling. So that's a little bit of a tip on how some market participants are trading one and the other. And if you don't understand why this is some of those moves are happening, this is how a lot of those bigger accounts are trading their crosses. Over to you, Ryan.
Thank you, mate. Good information as always for the viewers there. And it is important. It's something we talk about a lot in the room. When you're sitting down watching prices, know which strings being pulled at any one time. It's not often you see euro dollar going up as well as dollar yen. So if they're all pulling in the same direction, you need to look at what's doing that. And in this case, it's the yen crosses, and particularly euro yen. You know, it's a cross, but it's pulling up both of the majors and keeping them well bid. So it's always important, as I say, to know what strings being pulled at any one time, because that can help you with your trading. And we shall leave it there for a Monday. Good start to the week. Thank you to Kay, thank you to Stel, and all you viewers for coming to the Flow Show. Lots to do this week, so we shall crack on again tomorrow. Good luck this week, all.
Thank you, Kay and Brian and everybody.
Thanks very much, everybody. Have a good week.